We also have Chakri Lokpriya joining us on the show right now. Very good afternoon to you, Chakri. And we are coming to an end of a week which was very heavy when you talk about news flow. We come back only on Tuesday, which means we have 3 days of break, which means in this next 3 days, we wouldn't know actually what more would transpire when you talk about globes, when you talk about tariff front and what commentary will come in from Trump. But what's your take? How should one actually gauge this volatile environment?
Good afternoon. Yes, you're right. And I think this volatility will continue for several months. But the good news, I guess, is at least if this 90-day pause holds good, then India has a very few items that it needs to negotiate on a bilateral basis, unlike China or EU, which has a multiple items that they have to deal with. So India is a services economy. So from that perspective, if they reach an accord within these 90 days, market share for some of the manufacturing companies will move towards India. Valuations have corrected. And I think it's in everybody's interest, including the EU's and China. Hopefully, there's some kind of agreement within the 90 days. But as far as India is concerned, I think it's better placed than the others.
Okay, better placed than others. But Chakri, what should you be buying in this market, given that the fall has lasted quite a fair bit for us?
Indeed. All domestic-facing companies, which is consumer discretionary, where the demand is local, like Tata Consumer, Voltage, Blue Star, those kind of companies. In financials, again, the PSUs as well as the NBFCs, because they'll benefit from government spending and again, reviving the economy. And third is industrials. That's the easiest place that the government can start spending.
So, Chakri, just wanted to add, in this list of domestic-oriented companies that one should look at, would even cement make the cut?
Absolutely, yes. Ultratech, ACC, Ambuja, the market leaders, and clearly, in infra spend, cement plays an important role. And as interest rates come down, real estate also will see a flip up, and that also requires cement. So I think, yes, cement companies also valuations are reasonable.
Valuations are reasonable for cement companies. Arpit, that gets me to the next question. Then among the cement pack, which one looks technically pretty strong, or the one that is set for a breakout very soon?
If you see overall, cement pack is relatively outperforming. So if I just look at the charts set up within the heavyweights, look at the chart of Grasim. Grasim industry is relatively, if you see the monthly scale, it is forming higher lows from last 3 months. On the weekly scale, it has given a range breakout above 2550, 2600 levels. And in spite of market volatility, it has gained sharply, holding well above its 50 DEMA, 200 DEMA. And I think slowly, steadily, we can see a good move towards 2750, 2800. So overall, looking from the cement pack, Grasim would be a preferred pick with a major support around 2550 levels for an upside move towards 2800 and then 2850 plus levels.
Getting from our finance ministry sources saying that India will be pushing to fast-track bilateral trade talks with the US, and that many departments currently are in talks already. All necessary support will be provided to boost exports. So calming the nerves there. Now that we've got that 90-day relief period, in any case, we should try and get back our reporter as well and get in more details. In fact, Prakash is here with us. Prakash, what are you picking up from your finance ministry sources on how the India-US trade talks are currently shaping up? We will go to Prakash in just a bit, but it seems like we're pretty much on the right track, and India is also on track to achieve the projected GDP growth for FY25 as well as 26. So a lot of info that we're currently gathering from our sources. In fact, I think we can take it across to Prakash. Prakash?
The sources are suggesting that India is on track to achieve projected GDP growth for FY25 and 26, which is expected to be in the range of 6.3 to 6.8%. That's an important development coming in. In fact, government is confident of registering high growth amid multiple global challenges. When it comes to the government's strategy related to tariff with the US, the finance ministry sources are indicating that the concerned departments are in constant touch with the US administration on trade talks. In fact, India will push to fast-track bilateral trade negotiations with the US. In fact, the government sources are saying that they're moving in the right direction with the right intent. And when it comes to providing much needed support to the exporters to boost exports, the sources are suggesting that all necessary supports will be provided to the exporters in a due course. In fact, discussions are underway on the resumption of some schemes such as road tape or interest equalization scheme for that matter, and the decision will be taken at the right time. But the sources have made it very clear that the major announcements related to providing support to the exporters will be aligned with the progression of bilateral trade talks with the US.
Okay, interesting thing. Seems like things are pretty much par for the course, and they will be aligning big announcement as the bilateral talks progress. That's what we're picking up right now from our finance ministry sources. In fact, I just want to reiterate some of the other points also that Prakash was just making, that they're confident of registering high growth despite global challenges. The concerned departments, as Prakash was just highlighting, are in talks or constant touch rather with the US administration on trade talks. All necessary support will be provided to boost exports, and discussions are currently underway on the resumption of many schemes as well. And major announcements will be aligned with the progression of bilateral trade talks with the US as well. Chakri, one is wondering that while the trade negotiations seem to be on course and things will happen smoothly, I think for IT, the bigger concern is around the discretionary spend that comes in from the clients. We've got a flavor from TCS, maybe signs to pick up from there in terms of the employee addition, and, they're holding on to their salary hikes as well, with no clear visibility on when that's going to happen. Tell me, is IT a sector to avoid right now, or given the correction that's already played out in the sector, would you say it's a good contra bet?
IT, as you clearly mentioned, does not have any tariffs on it, but it's subject to the uncertainty of a slowdown in discretionary spend. Now, that's inevitable to happen, I guess, at least for the next quarter. Given that, if the trade talks are for 90 days, so for the 90 days, discretionary spends are likely to come down. But having within that, financial services IT spend, I think, will remain firm because, US banks, are largely domestic. Their export businesses are very limited, export services rather. So from that perspective, the stocks have already fallen. There's not likely to be much downside, but not much upside either.
Coming on the IT pack. Kunal, let me actually ask you the question. Between IT and pharma, which one actually do you think one should look at if they're looking at this sort of a defensive exposure?
So pharma, I think, of course, multiple reasons for that. Of course, one of them being that the pharma sector overall has been a lot more diverse as compared to the IT pack. We've seen, many of the pharma stocks going into different shades and different timing of corrections. For example, you had the mid-cap end of the pharma stocks, the likes of Zydus, Glenmark, etc., which started off the correction much earlier than the larger cap names. And now, there is a phase where large cap stocks are showing signs of a bounce back, or at least a time-wise consolidation, where many of these stocks, Sun Pharma, Lupin, Cipla, etc., these stocks have been holding up pretty well from their recent swing lows. So I believe that the move is much more stronger over there as compared to the IT stocks. And I would sense that the sharp correction which has happened for these IT names in the last 3 months, Infosys almost 300, 350 odd points lower, TCS from 4,500 to I think 3,100, 150 mark, which was the recent low for the stock. All of that indicates that this sector overall could see a lot more pain. So not too much gung-ho on the IT stocks from here on, but I believe pharma stocks is where you can look for a selective buying.
Chakri, I see a lot of chemical stocks hold out, both fertilizer and chemical, Deepak Nitrite, SRF, PI Industries, all these names are propping up. Is it that advantage India versus China trade that's playing out?
Absolutely, yes. No, the thing is, the tariffs will be on Indian chemical companies is right now 10%. It's far lower than what the Chinese companies will bear. And therefore, businesses can shift away very quickly to the Indian chemical companies and Indian agrochem. So I think, this 90 days is a good start. And actually, given that the sector has also not done well, it's probably worth looking into, PI Industries, UPL, companies like that.
Right, so that's the take coming in on the chemicals space in particular. We did speak about the real estate space actually very briefly, Chakri, when you did speak about the fact that you like that space. If you look at cement or if you look at real estate, given the fact that they're domestic oriented businesses, so they are some of the sectors to watch out for. But if you look at the way how the sector has been panning out, the real estate space, it did have a good run. Given the fact that you saw a lot of demand actually come back in the real estate space. But do you think it will sustain? Because now you're seeing a period of lull. Also, you will have inflation that will creep in, that will also pinch pockets.
The lull is kind of expected because, it's run up for very well, not just the stocks, but also the inventory clearance that happened at many of the real estate companies. But again, India is in an interest rate cut cycle. RBI cut rates recently again, and it's probably will cut at least a couple of times before the end of this year. Most of the home loans in India are floating rate, will benefit, apartment purchases, and therefore real estate as a sector could revive, after this lull period.
Right, okay, that's the take coming in realty. Kunal, we were just digging out, right? Most of these stocks have fallen 30 to 50% from their 52-week peaks. Further weakness on the cards, or do you think it's time to buy now?
I don't think it's a time to buy, frankly, Aisha, because even at a point when we were discussing the relative part for the sector approach, real estate index on a weekly closing basis, say for example at current levels, is at its multi-week low, and the index is below its long-term averages. No major signs of recovery across the large cap formidable names, at least in terms of price patterns. And the critical part is that there is no data on the volume side or the open interest side, which is very encouraging for the real estate stocks. What happens is typically, and we've seen this historically for phases when DLF was at 300 odd levels, and Oberoi Realty, etc., Godrej Properties, that when these stocks they typically form a bottom, they are generally followed up by extreme amount of volume as well as price action move, where you expect that these stocks would probably have formed a major support, and there are fresh hands, whether it's on the institutional side, which probably would have deployed the capital over there. But right now, the data is on much thinner volumes for these real estate names. So yes, you might have a phase where these stocks would probably give you those odd bounce back, but for calling a material bottom, the evidence has to be much spot on the volume front, which is not there on the chart so far.
Right, so that's the take coming in on the real estate space. But let's put the spotlight back on the markets, because you have the SIP inflow for the month of March, and it's coming at a 4-month low, and the sectoral fund is also down about 97% on month-on-month basis. What are the other key takeaways when you talk about the AMFI March data? Sharad is here with all of that. Sharad?
Well, important development coming in for the month of March, and do remember it's a very volatile month which we saw, and especially for the domestic institution investors as well in the mutual fund industry. Now, first and foremost, the most important number is the monthly SIP data. That number is coming at its 4-month lows, coming at almost 25,926 crore rupees. It looks like it's a 4-month low, but still it is not as big fall which was expected by the market participants, seeing the volatility happening in the last 3 months for the Indian markets, but still it's holding up more than almost, you could say, the 26,000 level marks as well. If you look at the equity inflows, that has impacted, and for the second straight month the equity inflows has fallen down, coming at roughly 25,000 odd crore rupees, and totally at an 11-month low. Now there is a surprise also in this data, and we are expecting that the small cap fund inflows would be less, but the story is different. It has actually gone up 10% on a month-on-month basis, coming in at more than 4,000 crore rupees. And also, if you look at the sectoral funds, that has actually seen literally no flows coming in when it comes to the flows. Last month it was almost 5,000 odd crore rupees, and now it seems like the sectoral investment or any NFOs coming in this segment has actually dried up virtually, and only 171 crore rupees of flows has been recorded. Now, strong flows coming in from the flexi cap funds itself, and this is the 12th straight month where the funds have coming in strong, and on a monthly basis is more than 5,000 crore odd rupees. Now, the equity AUM, surprisingly, that has gone up 7% on a month-on-month basis, coming at roughly 29.5 lakh crore rupees. This is suggesting that a strong deployment has happened by the DIs in the month of March, and that's why despite volatility in the AUM, we're seeing the AUM numbers going up. That means the cash levels might be coming down as deployment might have been there. NFOs, they are seeking weak inflows coming for the third straight month, and only 4,085 crore being raised from the 30 odd schemes which is launched in the month of March. And lastly, if you look at the overall flows, that number is very towards the negative side, and of course this is because of the fixed income bonds, and especially in the liquid funds there has been a massive outflows, and this is because of two reasons. That's the corporate adjustments and the treasury adjustments. But the important numbers to look at would be in the equity side and the SIP side. And overall, if I'd like to say, despite the volatility, green shoots are emerging this data, and this is very encouraging.
Large cap or flexi cap would make for a better entry point at this point in time, but corrections have happened across the market. I would say the corrections have been more significant in the large cap segment also because of the large FI outflows that we have seen, but there is a relative valuation correction which has happened in the small and mid also, though they still remain slightly above the comfort zone. I think there's been significant corrections that have happened there. Like I'm saying, I think we are hoping that this is not investors coming into a category like small cap getting enamored by last 1.5 years or 2 years returns that people have been able to make. Hopefully people are looking at the long term, and if they are looking at the long term, I would believe that in Indian markets opportunities are evolving. Opportunities are, if you have a time horizon of 5 years, 7 years, we believe having enough allocation to the broader part of the market, a broader segment of the market, which is mid cap and small cap, is essential in portfolios to create wealth.
Okay, that's the analysis and takeaways from the AMFI data. But Chakri, do you think it still makes sense to have a larger allocation to large caps? Is that the safer way to go?
I think it would be on a multi-cap basis, in the sense there's enough value out there among the mid caps and the small caps. So constructing a portfolio which has exposure to the stocks which have fallen the most, I think, given, in the last 6 months have not been easy. Generally, markets have been very volatile. So therefore, there are a number of opportunities out there.
Yeah. Right, so that's the way how the markets are looking like. There would be a lot of opportunities out there. But let's put the spotlight on some of the pharma names in trade today. You have Cipla that has seen a good uptick. They've got an approval for a cancer drug. You also saw Biocon also buck the trend on an intraday basis. They've also got an approval coming in for cancer drug. You have Sun Pharma because you have a US appeals court that's paved way for a hair loss drug launch. So you have Sun Pharma that is in focus. Aurobindo Pharma as well, that one also holding on to the shade of green. But yes, they did say that their US plant has been inspected by the US FDA, for which they've got about 11 observations. So that's the reason why you saw the mild downtick coming on the counter, but still holding on to good gains, about 2% or so. But Kunal, let me come to you. Let me get your BTST ideas for our viewers.
So there'll be two buy calls. The first one is Ban Kalyan Jewellers. That's a stock which is coming back into a swing breakout mode. And especially I think the 50 DMA breakout, which I believe could be a big trigger for the stock on the short term basis. So look out for targets in the range of 555, stop loss to be kept at 490. Titan is the other stock which is looking extremely attractive, and especially with this, on the line charts, when we've seen the double bottom formation for the stock, with the base forming at 2950, 3000 levels for Titan. So look out for targets in the range of 3400, stop us at 3130.
Right, so those are the BTST ideas coming in from Kunal. Arpit, any BTST ideas from you?
It will be from the chemical space, and as you've seen, chemical sector has been quite outperforming. Within the SRF, if you look at the chart setup, a classical retest of breakout on the monthly scale, a weekly scale, a strong bullish candle. On the daily scale also, the stock is already up by 6 to 7%, but looking at the setup wise, we can definitely head towards 3000, 3050 plus. So SRF would be a BTST idea, with keeping stop loss of 2870 for an upside move towards 3050 levels and 3031.
Okay, that's the take on some of those interesting ideas and the buzzers over there. But Chakri, we'll let you go on that note. Arpit, thanks as always for joining in as well.
If you like this video, then like, share and subscribe to ET Now.